people have called the Bitcoin a Trump trade. I mean, I said it as well, but I think crypto in general has become kind of tied because he's got some clarity on what his policy is. And I think, personally, regardless of who wins, I think there will be more clarity around crypto in 2025. And that might be something that will help Ethereum specifically.
It's Thursday, September 12th, and this is Markets Daily, hosted by me, Jen Sanasi. On this show, we navigate the currents shaping the crypto markets, providing insights against the broader financial landscape. So whether you're actively trading or simply fascinated by the volatility that is the crypto markets, this show is your compass to where we were, where we are, and where we're going. Good morning, everyone. On today's show, we have research analyst at Kaiko, Adam Morgan McCarthy, joining us. Adam, welcome to the show.
Hey, Jen. Thanks for having me. Glad to be here.
Of course. Thanks for being here. Now, I ask some guests this, and given your background, I'm going to start off by asking you, if you were to be allocating a portfolio this morning, what assets would you be looking at?
Well, I like to kind of steer clear too much of giving tips or kind of advice or pushing people in a certain direction. But I guess what I would say from our standpoint and what we can be certain on is that I'd push people towards assets that are, have good liquidity and solid kind of market structure like that. Bitcoin can handle market events better. If there's a shock in the market and there's some downside kind of pressure, if there's better liquidity, it's going to be absorbed better. So if you go further out, kind of like riskier altcoins or less widely traded, those kind of shocks are going to have a bigger impact, more outsized impact anyway. So I'd say liquidity.
Oh, go ahead.
Say.
Look, on the topic of Bitcoin, on a recent show, we unpacked a report by 10x Research that said 50 basis point rate cut could actually signal heightened economic concerns and raise alarm bells for Bitcoin. Curious your thoughts on that analysis.
Yeah, I was actually chatting with a colleague about this on Tuesday, and I think, and we covered this in a recent report, the one thing that's certain this month is like a lot of volatility. So if it's 25 basis points, I think, some people in the market might say that's too little and there's going to be a spike in volatility. If it's 50 basis points, as you said, that might kind of signal panic to some people. So either way, I think we're going to get a spot of volatility. If it's 25, it's 50. Yeah, that's my take.
Okay, so either way, regardless of if it's 25, regardless of if it's 50, we're probably going to see volatility in risk assets.
Yeah, that's how I see it anyway. And I think we saw a bit of that yesterday when the inflation number in the US came in line with expectations, cooling lowest in 3 years, I think, from the month on month of the year on year. And the market went down and then it recovered up at the end of the day. So I think as people digest this, there's going to be some kind of whipsawing action for sure.
I want to talk about some of these macro events that influence the markets. Yesterday on this show, we spoke about how the Trump-Harris debate influenced markets yesterday morning. But just given everything that's happening, given the fact that we're in September, which is historically a very volatile month, what are you watching? And was it right to attribute the fluctuation in the markets this morning to the Trump-Harris debate? I mean, the markets were down slightly, but they weren't down a huge lot. Like, what are you attributing the volatility to? And is it right to attach some of these broader economic factors to it, like the debate and the upcoming election?
Yeah, so I think there's two things there, as you touched on it. There's the political side of it with the Trump-Harris debate, and for better or worse, Bitcoin has become somewhat of a Trump trade over the last few weeks after he endorsed it in August, and Harris's campaign has been less clear on their policy. So I think we saw the price dip as the debate went on. I guess as reports suggested, maybe Trump didn't perform as well as Harris did, but the volumes were actually quite muted. So if you looked at the volumes then the next day on Wednesday during the CPI report, volumes were actually much higher, and there was people were trading that because I guess Bitcoin is showing more and more that it's kind of a macro asset. But so I'd say the politics gets a lot of headlines, but the what actually got the trading volumes and got people kind of like active was the CPI number. And then on the second thing of kind of September, we've seen 7 of the last 12 Septembers have been down. It's not just Bitcoin, risk assets across the board. Not really much that explains it. I mean, maybe the post-summer lull, people are coming back, activity picks up, and there's just kind of a spate of volatility, but it's kind of unexplainable. But I think, so far looks like it's on track to be another kind of poor performance for Bitcoin in September, but we are only 12 days in. There's a potential rate cut coming next week, and who knows what comes before the end of the month.
Yeah, I was looking at the Kaiko chart that showed that the last 7 out of 12 Septembers have been down. You just mentioned the rate cut is expected to come next week. Does that solve this September? Does that make this September different than past ones?
I think it's unclear. Like as I said at the top of the segment, I think there's going to be volatility if it's 25 or if it's 50. But I think that rate cut sets in motion potentially, Bitcoin's ability to kind of outperform going into next year. Is lower rates are better for risk assets. There's no denying that. That's kind of whether that effect comes straight away or if it's a little bit delayed. I would say that Bitcoin's performance might lag rate cuts slightly.
Now, you mentioned that Bitcoin is a quote unquote Trump trade. I know Bernstein analysts also said that recently. We're talking about liquidity. A lot of focus has been on Bitcoin lately and not that much on Ether. Are you watching Ether? Can you give me a little alpha here or insight into what's going on with Ether as it reacts to different macroeconomic factors?
Yeah, I think what we're seeing is Bitcoin largely moving on these kind of macro factors and otherwise, and I guess because it's the most liquid asset in crypto, and it's kind of 24/7. If you want to make a macro play over the weekend and something's developed, you can go into it. ETH should, in theory, be similar, but I think it's moving on its own sort of dynamics at the moment. The ETF launch wasn't as successful as Bitcoin's, but still, I mean, there's money allocated to BlackRock and to Fidelity now. There's likely new traders in the space trading Ethereum through this ETF, but the outflows from the Grayscale ETH fund have been large, and that's weighing on ETH. And then there's other elements as well. I guess with the upgrade with blobs in March or April, I think it was, layer 2s have become a lot cheaper to use. Fees on Ethereum are going down as more people move to layer 2s. So it's got its own dynamics going on there, and like kind of fragmented liquidity on chain. So I think it's going to continue to sort of move in different directions, move on different factors to Bitcoin. For the time being, I think the Bitcoin ratios continue to go down. It's slightly picked up following the approval of 19B4s in May, but it hasn't really kind of kicked on now. So I think Bitcoin has the more obvious drivers, with ETH has a lot of kind of headwinds to get through first.
Let's dive a little bit deeper into that. Make sense of that for me. What does that mean for Ether moving forward? Let's talk about maybe from now until the end of the year.
I think for Ether, now to the end of the year, two things for me I would watch is the ETF flows and how, if those pick up, and when the bleed from the Grayscale fund kind of dissipates. And another thing I guess Ethereum might benefit from is certainly after markets don't like uncertainty. The US election at the moment is kind of posing a bit of uncertainty. People have called the Bitcoin a Trump trade. I mean, I said it as well, but I think crypto in general has become kind of tied because he's got some clarity on what his policy is. And I think, personally, regardless of who wins, I think there will be more clarity around crypto in 2025. And that might be something that will help Ethereum specifically when, the election is all said and done. Whoever wins, that takes out an element of uncertainty and, the chance for kind of clearer regulation across the board. Because obviously that's what the crypto markets need at the moment. So Ethereum could benefit from that, I think, and Ethereum and ETF flows.
Here's what I got to ask you. We are putting so much stock into who's going to win the election and what that means for the price of crypto assets. And let's focus in a little bit more and talk about the price of Bitcoin. I know I mentioned the Bernstein report, but I think Bernstein said that if Trump wins, it could get upwards to $90,000. And if Harris wins, it could go downwards to, I think, as low as $30,000. Now, put your analyst hat on for me. Do you think that regardless of who wins, we're going to see volatility in the crypto markets, but then it's going to kind of level out? I mean, and I ask that because this is all based on election promises. We still need policy. We still need clear regulation. And there's much more to that than who takes the Oval Office next year. So do you think we're going to see volatility, whether that be on the upside or downside, but then it's going to kind of level out regardless of who wins?
Yeah, I think that's a fair assessment. I wouldn't personally, I don't have a magic 8 ball, so I can't say anything about prices, but I think, yeah, volatility is definitely guaranteed around these short-term events. As we've seen, like with the ETF launch in July, when the attempted assassination on former President Trump, we saw like the implied volatility term structures invert. So basically, the nearer term contracts were more volatile than longer term contracts. It should be the other way around. But that signaled to us that there was no kind of signals of panic in the market. That's kind of, there's been a few instances of inverted term structures. So I guess we're likely to see more volatility in the short term. And I agree, the election will happen. There might be some volatility, and then it's the new president won't be inaugurated until January. Policy, I mean, typically, I think if there is a change in any of the regulatory kind of institutions, that won't come in the first few weeks. I think the only time there's been a really quick turnaround was when President Obama was elected in 2009. He brought in a new commissioner very quickly, exceptional circumstances. I don't think we'll get a new commissioner by like February this year. So yeah, it's definitely going to be waiting to see. As for prices, I don't know, but I think any clarity around, whose regulation will open up the market for more investors and make more people comfortable getting involved. So net win.
Adam, if you had to choose one indicator for folks to follow who are interested in predicting the markets for their own sake so that they can allocate their portfolios well, what's that indicator that people should go and pay attention to and check regularly?
The one thing I'd watch is liquidity. I think this gives a great indicator of kind of the ability of an asset to absorb shocks. So if you look at Bitcoin's liquidity, 2% market depth, which basically aggregates bids and asks 2% either side of the market of the current market price. That's I think at the moment somewhere around 350 million. So in theory, that's kind of what the market can absorb. Whereas if you go further at the kind of risk curve, even like assets like Solana, there's less liquidity there, so shocks can have a more outsized impact. So I would say watch liquidity. If there's no liquidity, be careful because there can be that can negatively impact the market. And it can have the asset, and it can have a kind of sharper declines, and it can have sharper increases, but more often than not, it's sharper declines.
All right, and Adam, before we wrap it up, I know your September analyst call is coming up next week. It's called Breaking Down the Summer Sell-Off. Give us a little preview. How are you breaking down? What should we know about the summer sell-off?
Yeah, I mean, we're going to get into ETFs. We're going to talk a bit about like how that kind of played out over the summer in the market. Analyze basically, what was happening over the summer. Why were the prices kind of moving sideways? What happened after April when things were looking so good? So it's and then we're going to get more into Ethereum price dynamics as well that we talked about earlier, and then a little bit more about liquidity again. I can't stop talking about it.
Adam, what did happen after April?
Yeah, I think liquidity slowed down, trade volume slowed down, ETF trades as well slowed down. We saw, inflows remained pretty nice, pretty good. We had the kind of first outflows from BlackRock's fund and other funds in May, but I think the trading volume slowed down, and also kind of the old adage of kind of sell in May and go away. There was less activity. We had the Mt. Gox redistributions. And those things are hanging over the market. The German government selling as well. But with the market absorbed it relatively well. I mean, we're still trading around a 55 to 60K range after all of that. And there's still some selling hanging over the market, and so supply from Mt. Gox and other governments that might sell. So I think while it did go sideways and things slowed down, it's easy to kind of be drab. I think the Bitcoin absorbed that quite well in theory.
And lastly, if we just look historically, you just mentioned sell in May and go away. That is an old adage. September is known for being increasingly volatile. If we just look at what's happened historically, what should we expect to happen heading into the end of the year?
I would expect, I guess, kind of more trade volume to pick up again. This time last year we had like a exceptional kind of pickup into the end of the year with the Grayscale winning their case in August, and the ETF applications kind of developing, and that becoming more and more of a possibility of the ETFs being approved. We don't have that sort of catalyst this year. I guess the election is a kind of speed bump to get over first, and then we can sort of see about building from there. So I'm not looking beyond November, December really yet, but I think trade volumes should pick up. That's just my opinion. But yeah, we usually see that in Q4. Trade volumes are above Q3 in the data.
Adam, thank you so much for joining Markets Daily today. It was a pleasure.
No, it was great to be here. Thanks, Jen.
And thank you to all of our viewers and listeners for watching and listening. If you like listening to this show, subscribe to the CoinDesk Podcast Network. That is available on all podcast platforms. And if you prefer to watch, we are on YouTube. We're on CoinDesk.com. Subscribe to our YouTube channel. Give us a thumbs up. As always, it is a pleasure bringing you this show every day. I hope you have a great weekend, and we'll see you on Monday.